Australian tax brackets are used to determine the amount of tax a person will be required to pay the Australian Taxation Office, or the ATO, each financial year. If you earn money while residing in Australia, you will be required to include this in your end of year tax return each year. Welcome back to my channel. My name is Reese. In today's video, I'm going to be breaking down what the Australian tax brackets are and, in simple terms, how they work. The amount of tax that you will pay is entirely dependent on your income. The ATO, or Australian Taxation Office, uses a sliding scale to determine this amount of money that you will have to pay them each financial year. If you earn $18,200 or more in a financial year, so that's from the 1st of July all the way through to the 30th of June, you will be required to pay tax on every dollar you earn over that $18,200. Any amount earned below this number means you qualify for the Australian tax-free threshold, which is a bit of a mouthful, which means you will pay no tax on that money whatsoever. Generally, if you work for a business, your employer will withhold money for tax purposes throughout the year. This is called PAYG, or pay-as-you-go tax. So come tax time, if your employer has correctly withheld the correct amount of money, which they generally have systems in place which tells them how much they need to withhold each pay every time you earn money essentially, you should not owe the tax office anything come tax time, and potentially will get something called a tax return, which is a lump sum of money back. Summarized, if it's done correctly, you should only receive a small portion back when you submit your tax return, or potentially owe a little bit of money to the tax office. There are 5 brackets that taxpayers will fall into depending on how much they earn throughout the year. They may seem very complex, but I'm going to break them down and show you that it's not as complex as it looks. You fall into bracket 1 if you earn between $0 and $18,200. In this tax bracket, you will pay $0 in tax. You fall into bracket 2 if you earn between $18,201, which is $1 more than the previous bracket, and $37,000. You will pay 19 cents for every dollar over $18,200. So here's where it starts to get interesting. You fall into bracket 3 if you earn between $37,001 and $90,000, where you will pay $3,572, which is the 19 cents on the dollar between $18,200 and $37,000 component. Plus, when in this bracket, you will pay 32.5 cents for every dollar earned over $37,000. You fall into bracket 4 if you earn between $90,000 and $180,000, where you will pay $20,797, which is the tax component for the previous brackets, plus 37 cents for every dollar that you earn over $90,000. And finally, you will fall into bracket 5 if you earn over $180,000. In this bracket, you will pay $54,097, which cover the tax components from all previous brackets, plus 45 cents for every dollar you earn over 180,000, i.e. if you made 500,000, you would pay $54,097, and then for every dollar over 180,000, you would pay 45 cents for every dollar you earn. So I'm going to take you through a very specific example now and show you how to calculate it by hand, and also how to use what I use, which is a pay calculator, to understand and compare your results. Let's say that I earned $70,000 last financial year. Let's say that I have a HECS debt, and let's say the number earned does not include superannuation. So your take-home gross income is $70,000. The way to calculate what you will pay in tax by hand is as follows. For the 2019 to 2020 financial year, you will fall into bracket 3 because you earned $70,000, which is within the $37,000 to $90,000 bracket. This means that you will pay $3,572, which is the previous bracket's tax amount, plus 32.5 cents for every dollar that you earn over 37,000 up to 70,000. So if we break it down further, it will be $70,000 minus $37,000, which equals $33,000. This is the number that you will be required to pay 32.5 cents on for every dollar over $37,000. So now all you need to do is multiply $33,000 by 0.325, which is 32.5%, and you get a number which is $10,725. Finally, which is the last step now, add the amount from the previous bracket to the amount that you've just calculated, and you get $10,725 plus $3,572, which equals $14,297 for your income tax for this scenario or example. Here is the exact number shown using the pay calculator as seen in the yellow section of the screenshot for income tax. As you can also see, there are other taxes required for this scenario, such as student loan, which is the same as HECS, and the Medicare levy, which is 2% of your total income. I will mention them shortly, so stay tuned for that. Overall, the calculation is relatively simple and can be done quite quickly. For foreign residents or visa holders, different tax rates apply, meaning you will pay different rates of tax when you earn money within the country. So make sure that you do your reading and research online, because the ATO website should provide everything you need to understand how much you're going to pay in tax in a financial year. I've left a link in the description below to that page, just in case you're looking for that extra information. As I mentioned in the example, there are several other taxes which you may be required to pay throughout the year. These include things like the Medicare levy, the Medicare levy surcharge, and HECS, which is the equivalent of student loans, so it's higher education loans. These are all independent of you paying income tax, so be mindful that these are separate to what you would calculate as your income tax. I have linked the pay calculator in the description below. This website is very, very accurate, and it will calculate all of the taxes, including things outside of the realm of income tax, such as the HECS and Medicare levy, and it will break it down for you to show you what you will be expecting to pay in income tax based on how much you earn in a year. I've used this website for quite a long time, and I can't recommend it enough, because it will definitely give you an accurate representation of how much you will be expected to pay each year. Now, there are also some tax offsets which have been introduced by the Australian government, which you may be eligible for depending on which bracket you fit into. I have made a video about this in the past, and I have linked it in the description below as well if you want to go check that out. I hope that I've broken it down in a way that's simple to understand. I hope that you now understand how our tax brackets work. The general rule is that the more income you bring in, the more tax you will be required to pay. I hope that today's video was insightful and educational. If you enjoyed it, please consider liking and subscribing, and as always, I will see you in the next one.